Right then, so I'm back again. It's time for Talking Candles, and you're welcome to your World Market Monitor. My name is Titilayo Oyinsan. Our major bourses started the month lower with the candlesticks reflecting bearish sentiments. Through few of them bounced back and attempted to rebound at the close of the session. For the NGX, the market closed for the public holiday, of course, and for the ZSE, the candles show red. The NSC candles show long black. For South Africa, the candles are long red as stocks reverse gains to start the month. Candles are showing stocks attempted a rebound in Europe, and for the US, the candles are showing green as stocks started the month in positive tree. The candles in China are also as red as the flag as stocks traded mostly lower. Let's head into detail on equities now. Let's talk about the market opening, closing, and the key drivers. For South Africa, the candles show market closing in the red, as I said earlier, and the GSE FTSE All Share Index was trading near the flat line at 63,800 on Monday, close to the lowest in a year as gains in resource-linked stocks offset losses in tech stocks and financials. Now, meanwhile, concerns over the economic outlook persisted largely due to the war in Ukraine, high inflation and interest rate hikes locally. Power utility Eskom is currently engaged in its longest streak of load shedding and rolling blackouts expected at stage 3 for the rest of the week. Apparently, there's no end in sight at this stage, and it the company and it's struggling to stabilize its plants at this point. Now, on the data front, the slightly adjusted ABSA Purchasing Managers Index fell to 48.2 points in September of 2022 from 52.1 in August, pointing to renewed contraction in the country's manufacturing activity. That's where they stand. Now, the ZSE started the month in negative territory as the candles indicated long red. The ZSE ASI shed 37.53. That's about minus 0.25% points to close at 14,700. And 34.12, a 1 week gain of 17.08%, a 4 week gain of 7.54%, and an overall year to date gain of 36.15%. Now, a total of 5,186,200 shares corresponding to a market value of 182,295,518.83 Zimbabwean dollars were traded. Now, 32 ZSE listed equities participated in trading, ending with 15 gainers and 7 losers. Now, General Belting's Holdings led the gainers with 15% share price appreciation, closing at 2.30 per share. Now, that's followed by Ternal Holdings at plus 14.63%. And on the losing side, Seedco came out last with an end-of-day price depreciation of 13.43% at 93.50 Zimbabwean dollars per share, followed by CBZ Holdings at minus 0.93%. And yesterday's data shows an 84% improvement in volume, a 36% decline in turnover, and the current market cap of the Zimbabwe Stock Exchange is 2.2 trillion Zimbabwean dollars. Now, the BSE candles indicate it inched up, finishing the session in the green. The BSE DCI inched up to 4.90. That's 0.07% points to close at 7,406.67, representing a 1 week gain of 0.26%, a 4 week gain of 0.45%, and an overall year to date gain of 5.66%. At the end of the first weekday of trading on the Botswana Stock Exchange, a total of 38,705 shares in 8 deals, corresponding to a market value of 192,279,000. Or rather, let me take that again. It's actually 192,278.80 BWP traded. 5 BSE listed equities participated in trading, ending with only one gainer, namely Choppies enterprises with 3.77% share price appreciation. First National Bank of Botswana recorded the highest volume of 26,000 traded shares, followed by Botswana Insurance Holdings at 5,700, and Access Bank Botswana at 4,035, Botswana Telecom Corporation at 2,000, and the current market cap of Botswana's stock exchange is 393.6 billion BWP. The NSE started the month in the red as the candlesticks indicated significant selling pressure, suggesting the price is bearish. Now, the Nazi shared 0.49, that's about 0.38 percent points to close at 127.92, representing 1 week loss of 4.48%, a 4 week loss of 7.31%, an overall year-to-date loss of 23.15%. Now, a total of 4,232,900 shares in 1,115 deals, corresponding to a market value of 95,424,878 Kenyan shillings were traded, and that's on 49 NSE listed equities participated in trading. Now, they ended with 14 gainers and 24 losers. Nairobi Business Ventures led the gainers with 7.74% price appreciation, closing at 3.48 Kenyan shillings per share, followed by Trans Century at plus 5.83%. And on the losing side, Sanlam Kenya came out last with an end-of-day price depreciation of 8.65%. at 9.08 Kenyan shillings per share, followed by Skin Group at minus 7.8%. And today's data shows a 66% decline in volume, a 72% decline in turnover, and a 10% decline in deals. The current market cap of the Nairobi Securities Exchange is 1.99 trillion Kenyan shillings. Let's head across the pond to Europe, shall we? Shares attempted to rebound, with the DAX and the Stock 600 trading around the flatline on Monday morning, or rather Monday afternoon, after falling more than 1.5% early in the session, led by gains in energy and utilities as oil prices soar. Despite the attempt, now the candles still read bearish as stocks in Europe ended a tumultuous third quarter. And, levels not seen since November 2020 due to lingering concerns about high inflation and rising borrowing costs now, as well as their impact on global growth. On the other hand, financials were among the worst performing sectors, with shares of Credit Suisse sinking as much as 12% to hit record low levels after the bank's CEO memo on Friday failed to calm investors' concerns over the bank's capital position and liquidity. Asian stocks mostly fell on Monday as weak market sentiments pervaded the start of the new quarter amid fears that persistently high inflation would reinforce the case for further monetary tightening, raising the risk of a recession. Oil priced early on Monday following reports that OPEC Plus was considering cutting output by more than 1 million barrels per day, keeping commodity-driven inflationary pressures elevated. Shares in New Zealand, Australia, Hong Kong, they're all in deep negative territory, while Japanese shares gained on expectations that rising prices and a weak yen would boost profits of export-oriented firms. Meanwhile, mainland China and South Korean markets were closed for their respective holidays. The CAC 40, the candles are red as the CAC 40 index paired early losses over 1% to trade slightly below the flatline around 5,760 on Monday, with investors remaining cautious in the face of global macroeconomic headwinds. Meanwhile, the final PMI S&P Global surveys painted a worrying outlook for the eurozone. And on the domestic front, the S&P Global France manufacturing PMI was revised lower to 47.7 in September of 2022 from a preliminary of 47.8, and below 50.6 in August, pointing to the biggest contraction in factory activity since May of 2020. Now, on the corporate front, tech stocks, financials, and luxury companies were leading the losses. And on the opposition, or rather the opposite side, TotalEnergies, Orange, and Engie advanced the most with gains of over 2%. Now, the candles are reflecting green in the US as stocks bounce back at the end of trading. At the opening, stocks did start the month lower, but at the end of the session, the Dow rose more than 200 points on Monday, while the S&P 500 and the Nasdaq added 0.8% and 0.5% respectively, as dip buyers emerged to blunt a Fed-induced sell-off that dragged Wall Street to levels not seen in almost 2 years. Now, all eyes are on the U.S. job report for September for further clues on the central bank's rate path. And on the corporate side, Tesla tumbled almost 5% after the electric car maker's quarterly vehicle deliveries fell short of analyst estimates. Last quarter, the Dow fell 6.7% to post a three-quarter losing streak for the first time since 2015. And the S&P and Nasdaq dropped 5.3% and 4.1% respectively to notch their third consecutive negative quarter for the first time since 2009. Interesting stuff. Now, the UK stocks in the market didn't do so well as selling pressures renewed. The candles show long red as equities in London came under heavy selling pressure on Monday, the first trading day of the last quarter, with the blue chip FTSE 100 tumbling around 6,850, dragged by materials and healthcare stocks. Now, sentiment remains clouded by a worsening outlook for growth, with a deteriorating cost of living crunch dampening consumer spending. Meanwhile, Finance Minister Kwasi Kwarteng reversed the planned scrapping of the top income tax rate after a public backlash and market turmoil. Now, Scottish Mortgage Investment Trust and Entain were among the biggest laggards on the index, down 3% and 2% respectively. We're still talking candles. My name is Titilayo Oyinsan. Let's take a look at the candles when it comes to the commodities market. For coal, the candles show the bull market persists as Newcastle coal futures, the benchmark for top consuming region Asia, consolidated around $430 per ton and shy of its September record peak, supported by combination of robust demand and, of course, global supply shortages. The International Energy Agency sees global coal demand growing by roughly 1% from 2021 to about 8 billion tons this year, matching its all-time peak in 2013. For iron ore, the candles are bearish as commodities fell to a 10-month low. Prices for iron ore cargoes with a 63.5% iron content for delivery into Tianjin fell to $98 per ton, equaling the 10-month low hit twice during September, amid further concerns of low demand for steel and industrial inputs in top consumer China. Now, ahead of their week-long holiday, it wasn't really the best news. While official NBS manufacturing PMI pointed to a broad stagnation, the broader Caixin PMI measurement pointed to an unexpected and accelerated decline from the previous month. Now, the concerning data rollout of stimulus failed to spur a significant rebound in economic activity following thin power rationing and strict COVID lockdowns. Let's talk palm oil now. Palm oil has regained traction, shifting from the long red to an interesting outlook, remaining murky. But Malaysian palm oil futures were trading around the 3,500 MYR per ton mark, recovering from an over 1 to 2 low of 2,220 MYR reached in September. Now, this is amid prospects of more robust demand from top buyer China due to easing of the coronavirus-induced restrictions. Now, exports of Malaysian palm oil products for September rose by roughly 10% compared to August. Our cargo surveyor Intertek testing services said, while independent inspection company Amspec Agri Malaysia reported a similar rise for that period. And that's that on palm oil. Let's talk Brent crude. Now, they surged about 5% towards the $90 per barrel mark on Monday, amid increasing speculations that OPEC Plus was considering cutting production of up to 1 million barrels per day, or rather, about that 1 million barrels per day, a meeting later this week to shore up the prices. And they will move to mark the cartel's second straight monthly cut after reducing output by 100,000 BPD in August to deal with the macroeconomic headwinds. Now, oil prices recorded their fourth consecutive monthly decline in September. Aggressive monetary tightening in major economies stokes fears about the global economic slowdown and, of course, weaker energy demand. Now, of course, gold prices edged up $1,660 an ounce on Monday as the dollar rally took a breather. Although downside risks remain as major central banks are expected to continue raising interest rates aggressively to combat surging inflation. Higher interest rates raise the opportunity cost of holding non-yielding bullion, denting its appeal, of course. Now, the metal lost almost 3% in September for its sixth consecutive straight monthly decline and is still down about 20% from this year's high. So, all in all, on Talking Candles today, the market started the month, or let's say better still, the quarter, with mixed sentiments after a series of hotter than expected inflation prints and hawkish speeches from several Federal Reserve policymakers. Markets seem to have acknowledged that interest rates will be pushed to a restrictive level and likely stay high for longer, even at the risk of recession. And this will definitely hit the market, hopefully in gains. Yep, we hope the gains come through. Though the market is showing signs of a rebound, there are still concerns about oversupply and mounting fears about the global recession-driven demand downturn. Till next time on Talking Candles, I am your world market monitor, Titilayo Oyinsan. Until next time, happy trading.